Welcome to Ready Set Crypto. This is your brain on blockchain. It should be no controversy that we're living in the combination of a once-in-a-100-year pandemic and a once-in-a-100-year economic crisis. And they just so happen to be occurring at the same time, meaning we're in the midst of a once-in-a-1,000-year event. So even with that knowledge, why is the market continuing to rally? Sure, we should make clear that the market and the economy are two very different things, even if they are related. But the simple answer as to why the market is going up right now, even in the midst of a crisis, is that markets are irrational. There could be nuclear missiles flying through the air and people would still be buying through it all. But this answer raises another question. Why do we see markets act irrational? Actually, what do we define as irrational behavior? Well, let's consider the recent market dip. Do you think markets falling down 30 to 40% was an appropriate or irrational dip given the circumstances? Well, if the Dow went up from 19,000 to 29,000 in 3 years, you could certainly argue that a sustained 40% dip is very rational, considering that the global supply chain just threw an emergency brake. So bulls take the stairs, but bears take the window. But what if it dropped 60%? Would you still see it as okay to buy? Is that drop irrational? What if it dropped 80%? Same answer? And let's also consider the contrary position. Is it irrational to be bullish and for the market to go up right now? After all, European coronavirus numbers are improving. Investors are hoping that the market resembles more of a V than an L. The initial panic and uncertainty of this pandemic have passed. We also have unprecedented government support for citizens, the largest social security welfare plan since World War II, especially in Europe. This has made the combined crisis, at least for now, palatable. Realize that social media and the internet have also made people very comfortable, even when forcibly locked in their houses. It's a different world in that sense compared to the pre-internet era, and it's good for us to realize that. Quite simply, people are accepting the reality that the virus will never completely be eliminated. And really that was never the plan, and it would have been naive to think it ever was. The point of the lockdown was to slow the infectiousness to the point that a country could open its doors again and be able to handle the incoming cases without overwhelming their healthcare system. That's what flattening the curve really means. Delaying the peak, which overall means a smaller surge and allows doctors to better respond, the healthcare system won't collapse, and we build extra beds and infrastructure to be better prepared for the fight ahead. By flattening the curve, we buy time to better understand our enemy and to better respond to it. So markets have surged with lots of recent buoyant news from European and Asian nations about the slowing pandemic, and that's overwhelming the negative leading and lagging indicators about economic data. And so this brings me to my most important question that really helps us understand why it might seem like the market is irrational. Where do you think the market is going in the long term? For instance, if you assume that we'll be distributing a vaccine by next summer, well, that goes a long way to seeing economic recovery, right? After all, the average recession is 18 months in length, which dovetails with the notably rough projections of when a vaccine will be ready for distribution. So if you as a retail investor therefore conclude that the economy can return to normal, previous highs within 36 months or so, well, then it pays to be bullish and to invest, use dollar cost averaging, even if it seems so irrational in the short term. And that's why I want to make sure you understand this most of all. The majority of your lifetime investment returns will be determined by decisions that take place during a small minority of the time. And this is definitely one of those times. That's why you have to shut out the noise and look at the objective facts. If you derive your investment strategy from the media and what is currently in the news, you'll constantly be wrong or late regarding the next market trend. Now remember that the media is a capitalistic institution. They're doing their job if they're getting your clicks and your attention because that's what makes their shareholders happy. Don't get mad at them, they're just playing the game. Instead, realize what the short-term, fear-driven or greed-driven news cycle does to your brain. It causes you to miss important long-term news like the Fed backstops critical banking and instead focus on short-term Yeah, maybe chaotic, but ultimately not as consequential news, like Boris Johnson has been moved to intensive care. This is the trap that so many traders and investors fall into, thinking that today's news is directly correlated to market direction. And that's why they get so confused and feel that the market is irrational when it doesn't move in the directionality that they anticipate. No, if you really want to know what's going on, you've got to think big and you've got to look long term. And you do so by starting with the short-term fundamentals. Then you zoom out and relook. Then you zoom out to an even longer timeline and relook again. You keep repeating this process until you have better clarity as to what is going on in the long term and the big picture. Only then can you decide where you're making your prediction. Remember, plan your trade, then trade your plan. Trying to understand where things are going, and especially where the market is heading, by strictly looking at things day to day is like trying to see a trend on the 1-minute chart. Oh, there's just too much noise. But I get it. We can't escape this feeling that the market moves in strange ways. For example, right now, the market's acting like we just exited the shortest bear market in history, and now we can go party like it's January 2019 again. What's really odd is that Apple, Nike, Visa, just to name a few, are priced higher than they were 1 year ago. That seems ridiculous, right? How can expectations be better now than a year ago? Well, for one, expectations aren't better. It's just that all investing alternatives are worse than at the same point in 2019, resulting in higher price levels compared to expected future performance. And I don't think it will surprise anyone to see that companies aren't doing as well. What people are also not considering is the government's trillions in stimulus. And that's likely just the next bubble forming, but that's another video. Now, what the real important point is, when you see the market acting how it is now, irrational as it may seem, what you're actually seeing is the market be surprised by good news, a small amount of it anyways. In that regard, the whole situation is quite simple actually. The absence of bad news means everything is going well. The fact that there's any news makes the market go up. No news at all is what bears want. Lack of any knowledge, good or bad, is what drops the market. Any news, good or bad, that comes out means that it can be planned on, and that causes markets to go up. Think of it like a very large game of expectations versus reality. So long as an event can be anticipated, it can be planned for and priced in. Compare that to a couple of weeks ago when the doom and gloom scenarios looked really bad. But now the initial peaks could be coming earlier and be lower, meaning our healthcare system can handle it, and there's a chance of relaxing some lockdown restrictions sooner than expected. Big caveats there, but that's part of the expectations that are starting to be built up right now. Also keep in mind that the market is not necessarily coupled to the public health ramifications of this virus, nor the actual breadth of the economic damage, meaning the number of people affected. No, what the market is really focused on are earnings and control of companies. Earnings are coming up for all of April, and very few companies, if any, will demonstrate profits from Q1. But I doubt that will surprise anyone. Again, this is expected by the market, or as people like to say, priced in. When it comes to the direction of the market, it's best not to think of it as public opinion. There are huge amounts of money and stock controlled by a relatively small slice of companies and individuals. And federal lending, which there's a massive amount of it right now, can drive odd behaviors relative to the underlying economy. The market is really just a collection of these impulses, which at the moment are focused on two things. First, setting themselves up for even more ownership of healthy companies for the long term, and second, avoiding low return investments, loans these days, that will erode their wealth over time. These influences can afford buying at higher prices than optimal. If there's another 30% downturn, they can still ride it out pretty easily, confident that it'll go back up, and they'll be golden 5 years from now. What's driving a lot of this is that massive money has been injected into the system and will continue to do so. And money has to find a home. And to these major institutions, almost anything but stocks looks like a trash investment. But tomorrow, we'll talk about why I think they're wrong, and why this crisis may cause the largest insolvency event in all of history, changing everything, including the system itself. Now, speaking of systems, especially versus goals, I believe very strongly that goals are for about people who care about winning once, whereas systems are for people who care about winning repeatedly. To find returns in a volatile market, you need to build a system that can take the uncertainty out of your strategy and help you generate consistent returns, such as $100 every day. And I'm excited to say that's why we built and recently launched Ready Set Trade, which embodies all of these principles and more, and is really meant to help you skip past all the noise and the BS and help you focus on the one objective you really care about: making consistent income in times of inconsistency. We believe very strongly that more than any other time in history, trading from home is the perfect individual business. It's something that you could generate a side income from, which would help buffer the pressure of having a job right now and possibly not having one in the future. So if this sounds at all interesting, head on over to readyset.trade and don't miss the chance to get onto our service and lock in a 20% discount for life by using the coupon LAUNCH at checkout, because we'll be ending that very shortly. So become a better trader and start building your system to generate $100 or more every day by joining us over at readyset.trade. So as always, thank you so much for watching. I appreciate your support in these trying times. My promise to you is that I'll continue to write and produce these videos so long as you keep watching them. So if you enjoyed the video, please give it a like and subscribe if you haven't done so already. It really helps us out. And in the meantime, I'll see you in the next one. Cheers, guys.